afternoon, everyone. This is Joe Henschel with Beyond the Chart, and this is Stock Market Analysis Weekend Edition. Today is Saturday, May 10th, 2014. The Dow is, let me see, I'm looking at a weekly chart of the Dow, which I'm going to come back to. Let me come back to that. So the Dow was up only 32 points on Friday. The rest of the markets were just barely moving. So we're kind of inching our way up. We were officially up, I guess, 3 days in a row, but we're still in this, what I'd call a diagonal triangle. And I guess you could almost make the case that it's an ascending triangle if you were to put a line straight across here. But it looks more like a diagonal when you look on a weekly chart. And let me go back to that weekly chart if I can find it. Here it is. Okay, so when you look at it here, it does look a little more like a diagonal wedge type triangle, which is typically, this is kind of an ending diagonal triangle that we have, that we typically see. So kind of curious about that. Are we in this final stages here? Is this going to be it? Or are we going to explode and move up above this trend line here? And it's not unusual to get what I call throwovers over the tops of the wedges and or the tops of these trend lines. So we'll just have to see. It's we've got to let the market tell us what it wants to do. The S&P 500 in here again, very, very slight movement. Matter of fact, I think the S&P was just fractionally over 2 days. I think it was up 0.27 or something like that over the last 2 day period. So we really have been going sideways. We continue this sideways movement and in the process broke this trend line. We'll find out how important that is. The NASDAQ again is staying down below this trend line that was broken on Wednesday. So yes, it was up 20 points on Friday, but over the last 2 days still down and down for the week. And we've still got this potential support, potential head and shoulders type top that's playing out. Let me get rid of this for a moment. Okay, let's take a look at the New York Composite. Similar type thing, almost a little tighter in terms of its type of action in here. But again, very sideways, very tight in here, doji type of action last couple of days. We got a couple dojis here, we got a couple of dojis the last 2 days. So the market's really trying to figure out where does it want to go. Now the Russell kind of bounced on Friday. What was it, up 9.7 points? And it's kind of a pullback to this trend line. But still, even though we had this little bounce type bullish activity, closed on its high, it opened lower, closed on its high. It still was down over the last couple of days and down on the week. So nothing bullish about this activity or what's going on here with the Russell 2000 at all. If anything, you have to sit back and say it is continuing its downtrend. Okay, so that's it on the major indices in terms of the look. Let's go to short-term trading index. Wow, not a whole lot changed. Right in the middle. Stuck in the middle with you, as that song says. Okay. Volatility index continues to push lower. We're down 12.92. This was 12.91. So we're at pretty low readings in here, although we did get a handful lower back in January before we had the big pop. And we got a handful in November, 12.26, 12.28 low. So we'll see. This is not really giving a big sign. Now, there is one in here. The high-low index is interesting. This looks like it's breaking down. So we talked about how we had this bigger channel, and then we got this little tight wedge formation in here. And all of a sudden it's broken down out of it. And we've almost gone negative in terms of new highs minus new lows, net new highs, net new lows, that type of thing. And we're almost going negative. And so this looks like the market's breaking in here. Now we'll have to see if we continue to get follow through and then go lower than we did back here on April 11th. That's the last time we were below zero on the new high, new lows. And before that, it was January, so into early February. Okay, so let's take a look at the ETFs. The semiconductor ETF, we're right on it. We tried to have a move, a little bit of a breakout on Thursday, but then we've come back and we're just gone sideways on Friday, basically, down 0.2 points, so kind of unchanged. So we've come down to this support line, but it hasn't done anything. It's, again, look at this. If you concentrate on the bodies of the bars, it looks like it's just basically gone sideways. This one, we started to make a move down here, but then the buying came in. So again, no real direction other than sideways. You could make the case that well, maybe we got a little bit of a descending triangle type of action going on because of this down in here. It's this type of action, and it kind of coincides with that purple line, but it almost looks like a descending triangle type top that would then indicate that you're going to go towards the horizontal line and break on down. So we'll have to see if that's what we get. The next one we will look at is the home builders. Home builders did break down on Wednesday, broke through the support a little bit, but then came back up, closed right at it. Then it tried to rally, came right back down, and again down below it, above it. So it's trying to figure out also, where is it going? What's it doing? Really hard to tell. Thought we'd get more of a break, honestly, when we broke this trend line, this last fan line in here, but we haven't seen it so far. So the best we can say on the home builders that we're still on the downtrend. We're still getting lower lows and lower. We got a little bit higher high here, but I'm not sure that counts versus this peak. It's hard to say, but right now, I mean, it's hard to not say that this is in a downtrend. So we got to go with that. And the last one is the financial ETFs to see what they're doing. Well, sideways. Started to make this move down, came right back up, and again, over the last couple weeks, last 3 weeks. I mean, if you look at April 21st, 2184, and where are we right now? 2193. So we've really basically done nothing over the last 3 weeks. Net nothing. Okay, so that's it on the market and the ETFs. Now I'm going to go ahead. We're going to jump in and look at Apple, Amazon, and Tesla, and then I'm going to look at the some consumer-related stocks: Sotheby's, Lululemon, Gamestop. Let's see, Green Mountain Coffee Roasters, and then Whole Foods. So let's jump in and take a look at Apple. See what Apple's doing now. It's interesting, a couple of things on this. I'll come back to this scenario. All right, last week, right here, was last Saturday when we were looking at this. And when I looked at this, because of this move in here, thinking this is an ABC, I had thought, okay, we're going to pop maybe one last move up to about 605. Well, okay, I missed it by 59 cents. And then it turned around and came right back down. Now, I would be a little bit more bearish if this were closing below this 10-day exponential moving average, but it didn't. So I'm not quite sure. We'll have to wait to see. Do we continue to get more negative follow through down here and come down and close this gap as a first step? The other thing I noticed on this, when you look at the ADX, this is the green line, the ADX, then this is DI plus and DI minus. One of the little nuances of this is that a lot of times when the DI minus or DI plus crosses the ADX line, it usually is the end of that move, especially after you've made an extreme move. So like right here it was breaking back below the ADX. That was the end of that down move. Okay. Now here the blue line was breaking below the ADX. That was pretty much the end of that up move. Here it broke below the ADX. The end of the up move had occurred. Okay, and so now here we are breaking below the ADX, and there's a good chance that this up move has seen its day. So we'll have to see if that's the case or not. Okay, the next one we're going to take a look at is Amazon. Amazon continues to push down. I think we're getting a little bit of bullish divergence coming in. It looks like, the RSI is refusing to go lower in here. And the DI minus refused to go lower after this last move down. And I think we're getting some potential support coming in. When I look at where support could be coming in, I drew these dotted lines across to say here's like a support zone. And so I think there's a good chance this is what's going to come in and support Amazon. We'll have to see. If it breaks it, then it's going to be heading lower. But and again, I wouldn't dive in here and just say, okay, let's buy and take a chance. It's like, what are you going to bet on, black or red on a roulette wheel? I think you need to wait and see, give a little more evidence as to, that it starts to turn before you jump in. But just if you're short, it may be a time to take some profits or, at least be a little more cautious. So anyway, that's it on Amazon. The next one we're going to take a look at is Tesla Motors. Now, Tesla, I talked about last Saturday. Here we were, right here was Friday's close. So I said, look, we're continuing to be in a downtrend. And so the best scenario I can say is the 21's below the 55 were breaking down. And sure enough, it continued that downtrend. It broke through this support line right in here. And my guess would be that it's going to come down at least to the 233 and probably get support back over in here. So when you look at this congestion back in here, which is around the 150, and so I would say that would be the first initial shot is the 150, maybe 158 to 150 zone kind of thing. And then after that, you got to go lower. So that's what I'd be looking for on Tesla. Is clearly is continuing to break down and saying that it's in a downtrend. All right, now let's go ahead and take a look at some of these retail stocks. Sotheby's. Okay, Sotheby's looks like it's correcting. Looks like we've got 5 waves down in this move, and now we got a clear 3-wave move up. So I'm thinking that's a B move. So typically, if you start a corrective move with 5 waves, that means it's a zigzag. Okay, so that means you're going to get an A, B, C lower. Now, that doesn't mean that just because you're in a C lower that you can't get a rally in here, because look at this, you got a rally right here. You're going to get waves up and down as you work your way down. So you could get a pop back up in here, but this is my best picture of what's going on with Sotheby's at this time. No clear indication right now in terms of, do you buy or sell at one point, other than I think it might, based on this little reversal bar, it might be starting to rally back up for a little bit. Okay, next one is Lululemon. Now Lululemon is interesting because I think we had a peak over here. Let me back off a minute. We had a big move in Lulu, okay? This is from 2009 all the way up here to 2012. And then it started having its problems, had problems with its product, and I think they kicked the CEO out. And so now we've been in this overlapping corrective mode going sideways. But this looked like an A. This looks like an A, B, C, B, okay? This is like a flat correction. A, B, and now C. And what's interesting is many times the C distance will be 138.2% of A, and that's exactly what you have here. Okay, this measurement is measuring A, coming back and starting from 0 and saying, what percent of A is this move? Where are we? Okay, here's 100% of A, here's 138% of A, almost to the point. And it broke down out of this move. And it looks like we've had 5 waves, 1, 2, 3, 4, and 5. And it looks like we've had 5 little waves in this 5th wave. So it starts to make me think that we're at the bottom. And we are getting in a support zone over here from where buying came in previously, almost right where this bottomed on Lulu. So it is a high probability entry point in here, I think. Again, I'm not a bottom fishing kind of guy to sit back and say, again, you could define your risk. You say, well, maybe let me jump in. Let me take a look at the divergence real quick. I think we're getting a little bit of divergence on DI minus, and the RSI did not go to a lower low on this move. So you can define if you want to define your risk and define and say, okay, I think this is a high probability entry point. Well, let me say, I'm going to limit my risk to X and go ahead and jump in and try to buy. I mean, that is one way to play this. So anyway, that's it on Lulu. I think there's a chance that it may be getting ready to turn around. So it'll be fun to watch that one. Okay, the next one is Gamestop. I have not been watching this, and one of my subscribers, John, had mentioned this to me, that he had puts on GameStop. So depending on where he got them, it looks like he did very well. And it broke this big trend line in here, and it's come down. It's really hard to tell what it might be doing. So just looking at it from a wave structure, I mean, from a technical standpoint, it broke this trend line in here. All I can say is it looks, negative. It doesn't, let me see if something else I just happened to say, it might be a stretch, but I mean, if you take this over and say, well, are we putting in a big top? I mean, that is a possibility that it is a big Head and Shoulders type top. Let's back off and see where we're coming from. Not sure. That may be too big a head for the move. Honestly, I'm not sure I agree with that. That's not one I would choose to call a Head and Shoulders. It consumes too much of the move to say it's a top in my book. So anyway, best call is it's heading down and looks negative. Let's see. The next one is Green Mountain Coffee Roasters. So we got two left, Green Mountain and Whole Foods. Green Mountain looks to me that it's had 5 waves up, and in February it peaked. Now, the interesting thing, I'm going to come back to this. So it looks like we've had 3 waves down, okay? It got halfway into the gap, so it didn't even fill the whole gap. Buying came in, but 3 waves down, again, is not a zigzag. It's not enough to correct this whole move, I don't think. I think this is A, so I think we're going to have a B, then we're going to have a C come back down. That's my guess. That's the projection at this time. And the other thing that's interesting about this 5-wave move, and let me go to this. All right. In terms of gaps, I have put some labels on the volume, and it didn't hold for whatever reason. This looked to me like a breakout gap in here, a runaway gap in here, another runaway gap in here, and an exhaustion gap up here. And you got the volume to coincide with that. Huge volume here, huge volume here, huge volume here, and huge volume on this breakout. Okay. So I think that's a realistic, if we got the wave count right, I think that's a real good chance. Now, one thing I'm seeing right here that about the only thing that's giving me pause, so we'll have to watch this, is that typically on a 5th wave, you get divergence, okay, on your indicators on the 5th wave. And I'm not seeing that in here, not seeing that. So we'll have to watch this and see how it acts on this rise coming up on this wave. So anyway, that's my look at Green Mountain. We'll see how it acts when it starts to come back up here and retest the old highs. The last one is Whole Foods Market, and Whole Foods got its head handed to it the other day on the earnings report, and they just killed it. So it is clearly in a downtrend, and it broke support. Broke support here, and this is looked like pretty strong support, from here and here as it took up higher, and it broke it even on the opening and everything on that day, and it hasn't even come back, hardly touched. To me, the next support level is going to be down in here. Let's take a look back. You're looking at down in here, kind of right in the middle of this, and at the tops here are going to be potential support, and then right here at the bottoms where support came in before, and at the top here, you're going to get another support level. So that's my best reading, is that Whole Foods is in a downtrend now, and of course it has been. And then this was pretty big climactic type of, I don't know if it's climactic, but it's pretty big move to the downside. And a lot of times this happens in the middle of the third wave down. So we'll have to see where it starts to gain support on this move, but that's about it on Whole Foods. All right, that's it for today. A lot of stocks, a lot of things to review. Kind of went long. It's probably the longest video I've had in a very, very long time. So I appreciate you bearing with me. Click on one of the social media buttons and share the post, share the video. Subscribe on the opt-in form after the post in here or on the home page. Allows you to download the 5 Essentials PDF and gain access to the Trade Ideas webpage. I'll be back tomorrow with a review of trade ideas from last week and looking at forward to the coming week. This has been Joe for Beyond the Chart. Thanks for stopping in. Have a great rest of the weekend.